Good morning all and welcome to today's video. So I hope you had a great weekend. I have two pairs on watch today and those are dollar Swiss and pound Swiss. So my favorite of the bunch is dollar Swiss. So I'm going to break that down for you now. I am looking at this pair because we have on the higher time frames, we have this 1, 2, 3 touch structure. Okay, we have this here with this middle section, this corrective middle section, which taps into this very, very sharp area of liquidity here. Okay, when we see these sharp moves, there's likely a lot of liquidity here. And when we tap into them by way of a 1, 2, 3 touch psychological pattern, which is what we look for, that's often an indication that a move to the upside is imminent. Okay, we have the near miss here. We have the low, which gets close to this low, but doesn't quite tap into it. We then move up correctively, which is exactly what I would expect to see. The second touch breaks below the first touch, and then the third touch breaks below the second touch and taps into the sharp area of liquidity and then pushes to the upside, okay? So that is what I would anticipate. So at this moment in time, there is no need for price to come back down to this area because it's already tapped into that liquidity. So that gives me a clue that the sellers who caught this move down here are out of their positions and that the buyers, the bigger players, have stepped in for a move to the upside. The other clue that makes me think that is the case is that we're trading back above here now. Okay, so it's all simple stuff, nothing overly complicated about it. You can see that on the higher time frames, if I just zoom in a little bit, we retraced. We had a bit of a retracement here, but we didn't retrace 50% of the length of the body of this candle. That's a good clue as well. If we'd have retraced a little bit more than that, then it could have been the case that we were heading back down to these lows, but we didn't. That weekly close, the body of it did not retrace 50% of the length of the body of that candle. The previous weekly candle, that's a tick in the box. Okay, and you can see, just zoom in a little bit, that we had an impulse correction continuation, which is the natural ebb and flow of the market. This, to me, confirms the moves to the upside, this move to the upside, and this looks like a further impulse correction continuation because we've moved down, as you can see here, correctively. Okay, we've moved down more correctively than the preceding move up. Okay, if I just zoom in a little bit more, you can see that we have a little bit of a base here. We can see that we had an area of consolidation here, and then here price started to impulse to the upside, okay, giving me a clue that there is likely liquidity here. We come back round, we tap into the area, but we don't break below it, okay. And if you just look at this correction here, this correction started here, so it's likely the case that we're scooping back round to tap below here and tap into the base of this correction here before a move to the upside, and then we would have that 1, 2, 3 and this corrective middle section move up. Okay, this looks like this looks like it was just the buyers getting in too early, the buyers getting trapped into the move before they get washed out, their stop losses get taken out, and then we move to the upside. Okay, so that's the narrative that I'm seeing at the moment. If I just zoom down to the 1 hour chart, you can see here that the price started to impulse here. So that gives me a clue that when price came down here and we moved to the upside, this exchange of liquidity is what caused the impulsive move to the upside. As I said, we tapped into that area but didn't break below it, and you can see those near misses again. We have this kind of, I wouldn't be surprised here if we move to the upside. Okay, move back down, tap into that area and then go, and then once again we would have that 1, 2, 3 corrective middle section and something like that, and then we would have that 3 touch structure which then taps into the area. So this looks like what I call the FOMO move, okay, where we don't quite tap into an area, people think it's going without them, so they start buying, and then we see that corrective move up as these people try to buy it, and as the orders that are still in this area and the orders that are being placed there drag price back down. Everybody who got long here gets washed out, we tap into the area that we were originally likely to tap into, and you can see there's a little bit of a move there. Okay, so I wouldn't be surprised if we tap a little bit lower to tap into this low here before moving to the upside. Okay, so what I'll be looking for today, with all of that in mind, if I just unhide the forecast, I'll be looking for price to tap into this area, and then I'll be looking for a push up, an impulse up on the 1 hour chart to confirm that the liquidity is that would be the liquidity being washed out here, and then the correction afterwards. I would be looking for a 15-minute correction afterwards, and then I would look to get long on the break of the flag. And if the 15-minute, I would then drop down to the, if we had the 6 to 8 corrective 15-minute candles, I would drop down to the 5-minute chart to see whether this 15-minute correction was structured. And if there was structure there, then I would look to get long with a 5-minute risk entry from the base of this correction. Okay. And then, and even if I didn't get that, if I just got the, if it was just consolidation and I didn't manage to get the risk entry from the edge, I'll be able to manage it up to this first high here for something in the region of 4%, depending on the size of the correction. Okay. And if you just look, this will be relevant in a minute when I drill down to pound Swiss, but we've had quite a direct move here. This is quite a nice, reliable sequence with a bit of a sharp pullback there. So I'm asking myself, am I well positioned for a move to the upside? Yes, very well positioned. What was the sequence like on the way up? The sequence, well, we had a bit of a sharp pullback here. Sometimes that does happen. You know, if we get more orders coming in, more buy orders coming in this area. But after that, we get these little tight consolidations into this larger consolidation, into these tighter consolidations, into another larger consolidation. That all makes sense to me. This has been quite a direct move. So I'm satisfied with the sequence, and therefore this entry, which I'm looking for, okay, that looks like a solid low risk entry to me. So that is dollar Swiss. I'm going to move on to pound Swiss. So if we zoom out, you can see. So on this one, you can see that we tapped into this area. Okay, we had evidence. I think at the time I was looking for longs there. We had evidence of this structure here. We had the 1, 2, 3, which tapped into this area of consolidation there. If I drill down, that might be a bit more easy to see. We had a sharp move down followed by a sharp move up, and then we have that first touch, second touch, which breaks below the first touch, and the third touch and near misses to this area, and then the third touch, which breaks below the sharp area of liquidity and below the second touch, and then we move to the upside. However, you can see in this instance, price comes up, we get that impulse correction, price doesn't commit, and the clue that it was likely to come back down to test these lows was that, if I just take all this off of the charts a minute, this was the clue for me, is that here, okay, we had the near miss to here. Okay, so we had this move here. When we near miss to an area, it's likely that we'll tap into it. We do tap into it. So we have the first touch, the near miss, the third touch, which taps into the area. And then the clue for me was this impulse correction, which even on the daily chart, you can see this wick here, this 1, 2, 3. So that gave me a clue that this was just an impulse correction continuation to push lower to come back down to here, because we had this 1, 2, 3, this impulse correction continuation, this 3-touch continuation, and prior to that we had this high which had tapped into this high after we near missed to it. Okay, so these are all psychological patterns. That gave me a clue that we were pushing back down to here to retest this low. We did. What happens? Well, the same thing happened that usually happens, is we broke below it. Okay, people now think that this is now resistance because we broke below it. You can see evidence of that here. People start selling and price pulls back very aggressively. And this to me now looks like an impulse correction continuation to likely take out this high, which this high relative to this overall move down near missed too. Okay, so you can see once again, price moved up very aggressively and it's moving down more correctively than it moved up. Okay, and I like the fact that we're trading above here now, and also back above this sharp hook point as well. Okay, so that tells me that these sellers are well and truly out of their position. These buyers are well and truly in. And where do you think that these buyers, if they're holding the position, will be getting out of their positions? I would argue that they would likely be getting out here, or more likely here. Okay, so as I drill down, you can see one of the reasons, just to touch on it, why this is lower down on my list is because the first thing I'm asking myself is, am I well positioned? You can probably see already, if you've watched my videos regularly, we have this second touch here, which breaks below this first touch, but the second touch doesn't tap into this area of consolidation here, which caused this impulsive move to the upside. So this, to me, just looks like a move down to this area to break below this second touch and tap into this area of value. This is once again the FOMO channel before a move to the upside. Okay, so one of the reasons this is lower down on my list, one of the reasons this is second, is because if you look at so I'm asking myself, am I well positioned for a move to the upside? Therefore, yes, very well positioned. We have a 1, 2, potential 3 touch structure which taps into this, but notice the difference in the sequence. If we just zoom to dollar Swiss, the move was much more direct. Okay, so I'm looking at the directness of the move. The market often repeats itself. So if the move to the upside preceding where we're looking to get long in this instance has been direct, it's more likely that the move up from this area of value will be direct as well, versus pound Swiss. If you just look at this, it was very, very corrective on the way up before we broke to the upside and broke out of all of this long squeeze that was happening for a long period of time. So it's more likely that dollar Swiss will be reliable versus pound Swiss, just because the sequence on dollar Swiss has been more reliable as well. So price is always repeating itself. These psychological patterns that we look for are just repetitions of price. Okay, so the more repetition of price we have, the greater it is, the greater the likelihood of our trades playing out in our forecasted direction. So that is why this pair is slightly lower down on my list. I'm just going to delete all my artistry from the charts. Okay, and what I'll be looking for from this pair today is the following: the same as I was looking for. This is quite a large structure, and because of that, it's a large structure, just as with dollar Swiss, and especially because of that sequence. What I'll be looking for is that tap into this area. You can see here that we have this smaller structure here. Okay, we have that we have the 3 drives. We don't tap into that low here, but we have those first drive, second drive, third drive. Okay, so what I'll be looking for is price to tap into the base where we had this sharp move, where the liquidity is likely sat. Tap into that. I'll be looking for a 1 hour push up, a 15-minute consolidation, and then I would look to filter the 15-minute consolidation on the 5-minute chart to see if I could get the risk entry within the flag. And then as a first target, once again, I would be able to manage it up to this high as a first inflection point, something in the region of 3%. Okay, we may push a little bit lower if we did tap into this area of value here. We may push a little bit lower to tap into this little wick that you can see there. We may also, just as with dollar Swiss, we may also get a bit of a corrective move up here, a bit of a FOMO move before we come back down. Okay, because you can see we may be starting to near miss that again. This may be the start of another FOMO channel, especially as we're starting to move up correctively. That, although that could be just low momentum from the Asian session. And if we got this, then absolutely fine. I'm happy to wait. I'm not interested in FOMOing in along with anybody else who's trying to buy this in this area. But that's what I'll be looking for: a tap into that area, a 1 hour push up, a 15-minute consolidation. As these are minimum requirements, by the way. And then that flag, and I'll be looking to get long on this pair today. I have an alert set just below the area of value, just as I do with dollar Swiss. And if that does not get triggered, if neither of those alerts get triggered, then I will not be looking to place a trade. And that's as simple as we need to keep it. Thanks for watching, folks. I hope you've enjoyed this video, and I will see you again in the next one. Have a great rest of your day.